as we see the big banks already talking about 3,000, and it would be strange if we had a lower target. That's why we think the 3,000 and 3,300 is a good range for the gold price next year.
Hello, you're watching Proactive. I'm joined by AUAG Funds founder and CEO Erik Strand. Erik, very good to speak with you. You're out with your 2025 outlook for gold and silver. Before we get into that, let's recap their fantastic performance in 2024, because it looks like they surpassed your expectations.
Yes, I mean, we did have expectation for a 20% rise in dollars, and that would be 2,475, and we had to adjust that to a higher number. Now we had some pullbacks here after the elections in the US, but I think gold will end the year strong, so maybe our new target at 2,750 can become true.
So, of course, it did reach 2,790 back in October, and as you said, it's pulled back a little bit since then. But let's talk about some of the drivers that propelled it to that all-time high.
Yes, of course. I mean, there has been a lot of money printing in the system, also a lot of debt. We see the US deficits are really, really high. And of course, now we're also going into the central banks lowering the rates and a very high speed all over the world. So I think that's good for the gold price.
How about gold miners? How did they fare in relation to the gold price? Because you thought they would do better.
Yeah, actually, I mean, if we see at our fund, the AUAG Silver Bullet Fund, it has performed better than gold and silver, but still we think that it will outperform even more in the coming year.
I mean, and some of the factors contributing to their performance. So apart from the rising metal prices, how were they doing on cost control?
I mean, cost did go up. I wouldn't say maybe a lot, but still a lot, because we had inflation and we had energy prices. But what we see now is that work inflation doesn't really go up anymore. They have their income in US dollars, which is very strong. So income looks good on that perspective. And also the energy prices have been going down. So it looks really good on the cost side. But of course, they did go up for a while there.
So your new target for gold for 2024, $2,750, Erik, and you're looking at 3,000 and potentially as high as 3,300 in 2025. What's going to drive that?
I think, I mean, we are going into the overdrive cycle with all the rates coming down. And I think the Fed will have to lower rates really, really fast because the cost for the US to pay the interest on their own debt is so high. And I also think even if the incoming president is talking hard and they're going to like reduce debt, I don't think that's going to happen. I think they want low rates and they're going to push the Fed somehow to get the rates lower and really hit the pedal to the bottom, to the metal, and that will drive the prices much higher. And as we see the big banks already talking about 3,000, and it would be strange if we had a lower target. That's why we think the 3,000 and 3,300 is a good range for the gold price next year.
Erik, how about inflation? Where do you see that heading in 2025, and how are you factoring that into the gold price?
I mean, the numbers for inflation are coming down, but I mean, still there is inflation, and we still have the old inflation still there in the system, the prices. And I think actually they maybe will have to give up on that target, that we will have to live with a higher inflation because they cannot solve everything. And in the end, there's so much debt in the world. And one way to get rid of debt is inflation. So somehow I think they want it. They don't want to say it. So I think we will see a higher inflation driven from many different angles, also because it doesn't get any cheaper to produce in the world. We have a much bigger middle class in India and China who is consuming. So I think there are a lot of things talking about higher inflation and something we have to live with. And I don't think the central banks will be able to fight it with higher rates. They need to lower the rates in the system.
How about geopolitical tension going into 2025? So, of course, we have the ongoing conflicts between Russia and Ukraine, and of course, between Israel and Hamas. But we also at the same time have Syria, which has now started to escalate. Will they help to support the gold price?
I mean, of course, there is some fear in the world because something can lead to something else. What would be good for all metal price, I think, is a peace in the Ukraine-Russia war. because now the Russian metals are coming into the market at a rebate. And if we would have a peace, I think that rebate would disappear and that would push the metal prices higher.
We haven't mentioned silver yet, Eric. How has that performed in relation to gold in 2024? And how would you expect silver to perform in 2025?
I think it's really, really interesting with silver because we see the gold-silver ratio coming down, making it more interesting to invest in silver. It's around 85, 86 to 1. They had approximately the same returns as of now this year. But silver was strong until in the summer. It was the gold-silver ratio was down to 74. We would like to see it coming down to 70 to 1 and then going even lower, 60 to 1, 50 to 1, 40 to 1. So the potential, the big potential, even if gold prices are going up, the big potential is in the silver price.
Okay. And mining companies, both gold and silver, how would you expect them to perform in relation to metal prices going into next year?
Yeah, that's the very interesting part, and that's their margin expansion that we really think is going to come. We are already starting to see it, but with these stable high prices, and they get their income, as I said, in US dollars for the gold price, silver price, and they maybe have the cost in pesos or something else. So I think that would be really, really good for them.
We'll have to see when 2025 hits how they all perform. Eric, thank you very much for your insights and have a good new year.
Thank you.
That's AUAG Funds founder and CEO Eric Strand.